Interesting. So, without going through all of the, what could keep you out of a trade and everything else, you see a rally at this point from that X to this X. That's the move. Are you looking for a retracement? And that would be this pullback into support, which is our red dotted line or PWAP. And you're looking for some action that sends it back up, this type of chart pattern. And if you look at our red PWAP over here, we are looking for reasons to get LONG. And if you wait for shorts to come in, which is, oops, went too far. If you wait for shorts to come in, which happened right there, you see these shorts come in, laser go green to red, and our chaser, the buyers started to catch up to the sellers about 1,100 up. Because prior to that, the sellers were dominating. There was 1,000 sellers, see, 1,090 by 750. And there were more longs than shorts. But at some point, you got shorts came in, chaser went balanced, and look at that, up, up, and away. Precursor, lead, lag. You could see the pink triangle get breached. You could see how many shorts were in. You could see the chaser go to the buy side. Really goes to the buy side right before. Let me try to back it up just a beat. Come on. Right there. All right. So if you're looking at this and you're bullish, you're like, if this pink gets breached, look at that. Look at how that went 1,000 by 300. That was another opportunity to buy it if you were bullish, but also down here to buy it if you were bullish. It's all about fire in the ready, aim, fire progression. Sure, it's about ready and aim, but most people have a terrible fire. Most people have a terrible ready and a terrible aim, and everything is arbitrary. So then your results are arbitrary, which mean what? Inconsistent. You cannot get confident if you cannot get consistent. They go together. And so you have to be objective. You have to feel as if you're getting a head start. The definition of a good location to enter is having the price go your way as soon as possible. The faster it goes your way and you start seeing profits, the better the location. The best buy location isn't lower always. No, it fits the definition of how long did it take to start paying you. You're talking about sellers or shorts rather that come in. I was just brainstorming some things out, and you have to like identify the players that matter. There are always longs and always shorts, and there's so many people that don't get it. That shorts are future buyers and longs are future sellers. I'd always get someone to ask, "Well, yeah, but to get short, you would have had to sell it, right?" Yeah, but they already did it. You're right. You have to sell to get short, but you already did it. It's in the past. We're trying to predict the future. Yes, information from the past is important. It's not irrelevant, but it'll never be as important as whatever we get now to help us predict the future. If you're trying to pick where price is going to go, you have to know what's going to get it there. And what's going to get it to go up is more buyers than sellers. It isn't more buyers, it's more buyers than sellers. The then sellers is an important part of that equation. And so when you're looking at this and you see the shorts pile in, remember, shorts equal what? What do shorts equal? Shorts equal future buyers. And then longs equal future sellers. Future sellers. What are you trying to predict as traders? Future buyers versus future sellers. We're trying to predict the buying and selling that's going to come in. And so when you work backwards to try to find what we're looking for, other people's positions a pretty important data point, isn't it? And then when you've got this chaser, which is not just telling you, it's not just accumulating the number of buyers, the number of sellers, adding it up on a price ladder, and here are these numbers. It's more nuanced than that. And these are also indicating future buyers and sellers. So when it gets out of whack and you get more buyers chasing, there's just a better chance to go up. And if you're bullish, obviously it's because you think price is going to go up. Why? Because somewhere in your analysis, you're predicting more future buyers than future sellers. Somewhere in your analysis, you're going to predict more future buyers than sellers. So you better in your tools be able to kind of show how it's giving you the ability to predict that. If you're a meteorologist, explain why it's going to rain this afternoon. You know, what has to happen? I'm not a meteorologist, but meteorologists be able to tell you when these three things happen, it's highly probable it's going to rain in 2 hours. And so all we're doing is probabilities, and we're not trying to predict if it's going to rain in 5 days, but maybe in 5 hours. Put yourself in a position to predict future buyers and sellers. If you had information early, let's say you had Jerome Powell's speech early a week and a half ago when he was dovish. And then you read the speech and you're like, this is clearly dovish. The market's going to rally because that's what the market wanted. And you got that speech. It could have just been seconds or minutes before the prepared remarks were released. Well, what did that speech, knowing it early, give you? People are going to come in and buy it, right? People are going to come in and want to buy equities based on this speech. You just predicted future buyers. That's all. And you got it early, or at least before most of the rest of the market. So be able to explain the tools that you use and weed out the subjective ones or ones that just are really irrelevant, that just don't matter. All of these features on the charts that you're looking at, we're not using all of them. It seems like a lot of noise because it would be if you used all of them. They're the same thing over different time periods. So I tell people, because I get asked, where do you find this? Go to edgetradinggroup.com. Email me, Anthony at edgetradinggroup.com, because put yourself in a position to have better predictive tools. At least know what you're predicting and know what you need for what you're predicting to come true. And so many people are in this business. They fund an account, they read some books, they do put in a lot of time to try to make it work, and they never really gave themselves a chance. They never turned over the necessary stones that would give them an opportunity to actually do it.